Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of FATCA reporting and the filing requirements for U.S. persons. So what is FATCA? FATCA is the Foreign Account Tax Compliance Act. More than 110 foreign countries, more than 300,000 foreign financial institutions have agreed to report U.S. account holders with foreign accounts to the United States government in accordance with FATCA. The goal of FATCA, whether that goal is met or not, is to promote financial transparency and to avoid offshore tax evasion. Unfortunately, it seems that it's primarily the foreign countries that are doing the reporting, even though the agreements the U.S. enters into are reciprocal. A lot of these other countries, understandably, are up in arms because guess what? The U.S. isn't meeting their end of the bargain. Welcome to the U.S. tax system, right? So who is considered a U.S. person for FATCA? From an individual standpoint, it's a U.S. citizen, legal permanent resident or green card holder, visa holder or foreign national who meets the substantial presence test. Maybe you're here on a B1, B2, L1, H1B, and you've been here, I think it's 121 days over each year for 3 years. Hypertechnically, it's more than 182 days, but you have to do it over a 3-year period, at least 30 days in the current year. So if someone's here consistently, it generally averages out to about 121 days. When it comes to FATCA reporting, essentially what that means for individuals, and the focus today is on individuals as you can garner, but for individuals it involves filing Form 8938. Unlike many of the other forms, FBAR, Form 3520, Form 5471, you only have to file the Form 8938 to FATCA report if you have to actually file a tax return in the current year. So if for any reason you fall below the threshold for having to actually file a tax return, even if you're a U.S. person who would otherwise have to file one, you don't have to file the 8938 unless the tax return is actually being filed. Oftentimes, FATCA Form 8938 is compared to the FBAR. FATCA is much more detailed. You have to identify if there's any interest income, dividend income, royalty, capital gains, etc., generated from the specific assets. In addition, you have to identify specifics about the account or asset. Was it opened in the current year? Was it closed in the current year? Is it jointly owned with your spouse? Is there any tax liability stemming from the income of a particular asset? Some of the common assets that are reported: life insurance policies that have a surrender or cash value, foreign pension, stock certificates. Most accounts, there are some nuances as to what accounts are required, but for the most part, the IRS seems to take the position that all accounts qualify as specified foreign financial assets, so we typically recommend to clients, unless other strategy prevails, to just report all of their accounts similar to what they would do with the FBAR. A FATCA letter is a common term you might find online. A common situation or catalyst for many of our clients is they'll receive a FATCA letter from their bank. It might also be called a FATCA CRS letter. CRS is the common reporting standard, similar to FATCA but different. U.S. is not a part of that regime just yet. What will happen is with a FATCA letter, the bank will ask the person, hey, certify that you are a U.S. person and complete the W-9 for forwarding to the IRS, or certify that you're not a U.S. person and complete the W-8 BEN. If you know you're a U.S. person and you complete the W-8, that's probably a form of tax fraud, so you want to be careful doing something like that, especially if you're doing that willfully. If you're out of compliance for the prior years, there are a whole host of different voluntary disclosure programs, FATCA amnesty programs you can use to get into compliance. There's a common misconception, OVDP, if you were willful. OVDP was ended in 2018, but the IRS did expand the traditional voluntary disclosure program, so if you can't certify under penalty of perjury that you're non-willful, you can still qualify for the voluntary disclosure program, domestic and foreign assets. One of the common submission types is through the streamlined filing compliance procedures. The two main programs are streamlined domestic, which is used for non-foreign residents, streamlined foreign, which is used for people who can meet the foreign resident requirement. Streamlined foreign is a great program because you get a full penalty waiver. Streamlined domestic carries a 5% penalty under Title 26. For people who don't have unreported income, they may qualify for the delinquency procedures, and then reasonable cause is generally always an option if someone is non-willful and can meet the other requirements. If you want to learn more about FATCA reporting, we have lots of information on our website, goldinglawyers.com. If appropriate, feel free to reach out and we can schedule a reduced fee initial consultation. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.